Well, welcome back to AtlasClear's channel, setting out to basically create a more efficient platform for trading, clearing, settlement, and banking. Joining us to give us a high-level overview of the recent earnings, bit of the growth strategy. Of course, we have a couple of the board of directors here, as always. We have John and Craig. First and foremost, welcome back, gentlemen.
Thank you for having us. Good to be back.
Always a pleasure to get you guys back. Yeah, no, this is awesome. So I want to drive first and foremost right in with you, John. Wilson Davis, basically results on a standalone basis for commissions increased by 27.9% to about 1.78 million just for the first quarter of 2024. Fairly substantial here. Do you want to talk a little bit about this?
Yeah, it's really a combination of things in that we're making an effort to develop the business that's inherent to Wilson Davis. We've got over 6,500, approximately 6,500 accounts inside of Wilson Davis. And historically, the previous management didn't try to find ways to increase the revenue there. So we recognized some additional revenue on that front. They also didn't historically do margin lending or stock loan. We've accelerated both of those businesses a little bit. And so that really helped us. And then also, we simply had a little bit more volume this year versus last year. So that combination of effort towards mining the business that's internal to Wilson Davis that we've talked about in previous episodes, we've had some success on that. And that combination of growth internal to the system and then a little bit more natural volume in the system is what helped us get over 27% quarter over quarter, which we think is good.
Yeah, and you also saw a 68.5 million non-cash loss on the acquisition of the AtlasClear asset purchase. Basically, operationally profitable. Do you want to just also kind of iterate? I mean, there's been a lot going on since you guys kind of came public via SPAC, so maybe break that down a bit for us as well.
Happy to do that. Into the D-SPAC, obviously, we knew we were going to have huge expenses getting that D-SPAC done. The biggest chunk of that really related to technology that we absorbed from the Atlas fintech companies. We had over $44 million in third-party valuation on the technology that we brought in, which is world-class. But because the companies are affiliated, we had to, from an accounting perspective, write down to the actual cost of the development, which alone dropped it to about 17 million. So it's something on the order of a $25 million loss. Loss is kind of a weird word, but that's how the accounting views it. We'll be able to write that off going forward. But that technology on a third-party basis is worth approximately $40 million, maybe a little bit more. So we wrote that down right away. That gives us some advantages in how we manage our taxes moving forward. And then we had transaction expenses of 20 plus million. We had lawyer expenses of 9 million. We took on some convertible notes that we had to write down and push it to a fair market value, which cost us another 6 million. So all in, coming out of the quarter, we were north of $86 million in losses, which really is tremendous. But looking at it from the going forward perspective, we no longer have to incur losses on a quarterly basis. We did what we could to bite it all off in the first quarter. And then to the extent that we can make gains on any of that, improve the technology more, reduce some of those expenses, which are under negotiation, that'll come back to us as income right out of the gate. So from our thought process, management was people look at SPACs, probably rightly so. They get beaten down a little bit because the transaction costs are high. We decided we'd bite the bullet, all of it in the first quarter.
Yeah, I think this was very clerical, and I appreciate the insight. And speaking on a go-forward basis, Craig, do you want to give a little insight into, this launch pad that you've kind of created here? Where do we go from here?
Sure, absolutely. Well, we're very excited about the future. We were happy with the first quarter, but the reality is that we've spoken in the past about all of these latent business lines that have been untapped from a revenue standpoint in Wilson Davis and the technology set that we're bringing to the table, and also their licensing set primarily. So we've got 4 primary growth strategies going forward. We're going to be growing our client base organically, using our new technologies that we're bringing in, creating efficiencies, cost efficiencies for them. We think that we will increase the revenues that we have in our current client base. We're also going to be looking to growth strategy number 2 is to grow our clients' revenue. Quite simply, we succeed if they succeed. There can be a number of different ways to do that, but we think with a broader product offering, with new product innovation, we bring substantial value to them, and will bring substantial value to them in the future. And so we're excited to present them with the opportunity to grow their client base, revenue base, while at the same time, growing our own. We're also going to be pursuing potential international expansion opportunities. Primarily, we're going to be focused in the U.S. initially because there's so much business to be had here, so many clients that we can add. But over time, we want to tap into the international markets where, in order for them to get access to the U.S. assets and investments in U.S. assets, they have to have a relationship with a clearing firm. We have past experiences from the international side, and so we know there's a wonderful opportunity there, and so we will look to expand that over time. And then the fourth growth strategy is we're going to be identifying, executing strategic acquisitions. These are acquisitions that will ultimately do a number of things. It's going to include their ability to enhance our product capabilities, broaden our client reach, drive further scale, and also increase our presence in new geographies. And finally, it's going to help generate attractive financial returns for our shareholders overall. So we think there's tremendous untapped potential in the company. We don't think anything is reflective in our stock price right now of the true value. And so we're excited to execute on these strategies moving forward. And we think the proof will be in the pudding, but we think we'll deliver.
On that note, we'll pass it off to the viewers. As always, we'd love to know what you think and consider subscribing like this as Catalyst and News Hit will bring it to you here. But on that, we look forward to catching you in the next one.